Hey guys, welcome back. I hope you had a really great weekend. So we're about to start a new trading week, and last week on Friday we had huge down days across the board, nothing less than 1.5% down, almost 3% down in IWM. So big down day on Friday, and we started the week here in SPY on Tuesday. Monday was President's Day, and we started above the 35 EMA. Tuesday, we traded flat, little bounce on this 35 EMA here. Wednesday, we did make a run to make new all-time highs, and then Thursday, we gapped down and dropped. You could see on Thursday, after that drop, we did see that red signal line, and then when we popped back up, this is still on Thursday, you could see that we got a rejection here at the red signal line. Friday, we opened and we just sold off. We did drop initially down to the bottom of the implied move. There was a downtrend line right here, which we tried to hold, and we ended up dumping out all the way down to the 50-day moving average. So big down day on Friday. Tuesday, Wednesday, Thursday, we closed within the implied move, and Friday, not even close. SPX, same thing over here. We opened above the 35 EMA on Tuesday, dropped down, bounced on the 35 EMA, then Wednesday ran it to make new all-time highs. Thursday, gap down and drop. We took it all the way down to this downtrend line, bounced on that, and then took it to the 35 EMA. If you were looking down below right here, 35 EMA and the red signal line, we did see resistance and a rejection. So we did close above the 35 EMA on Thursday, but Friday we played out that rejection and we gapped down, small gap down, and drop. This was a huge drop. We took it down to the bottom of the trading range, tried to hold it here. You could see a little bounce on the 30-minute 200 moving average and a small pop up, but we did not hold it. We got rejected, took it all the way down to the 50-day moving average. That is a huge move. Most of the time we close within the implied move. We did Tuesday, Wednesday, and Thursday, and Friday. We just couldn't hold it up any longer. We did have low volume all week, and we did dump out all the way back to the 50-day moving average. So SPY down 1.71%, same with SPX. VIX, we've already moved on to today, but we did close that up on Friday, and we did not close within the implied move on Friday. Not even close. QQQ, we opened on Tuesday right here, and we traded pretty sideways. We bounced on the 35 EMA, and then Wednesday we pushed up to make new all-time highs. We did have a bearish divergence here, lower strength, higher highs. And from there, we gapped it down on Thursday, dropped underneath the 35 EMA. So we started printing those red candles. We swung back up, and you could see right here on that swing up, if you were looking below, we did see a rejection right there at the signal line. So then Friday, we actually opened in the green on Friday and then sold straight off all the way down to the 50-day moving average. So this is 50-day moving average and also the 1 hour 200 moving average right there. And we closed just a little bit above that level. I'm not even going to say we bounced there. We didn't. We just stopped near that level. Huge down day on Friday, down 2.08%. Tuesday, Wednesday, Thursday, we closed within the implied move each of those days, and Friday we did not. Believe it or not, the 35 EMA is still trading above the 30-minute 200 moving average. That is bullish. However, we do have this red signal line, so we're not 100% bullish, but the moving averages are showing a bullish setup. So even though we closed underneath that 30-minute 200 moving average, 35 EMA, and you should always know where the 35 EMA is, it is still above, and that is bullish. So QQQ down 2.08%. VXN popped 10.9% on Friday, and we did not close within the implied move. IWM had a very interesting week here. We did see this bearish cross down over here. This was on February 7th, and we've been bearish ever since. So Tuesday right here, we opened above the 35 EMA, and above the 30-minute 200 moving average. But this 35 EMA was under the 30-minute 200 moving average, and that was a bearish setup. You can, if you just look at the 35 EMA, completely underneath that 30-minute 200 moving average. Don't underestimate when we slide that 35 EMA underneath the 30-minute 200 moving average. So Tuesday, we opened the week with a attempt to get above previous resistance, got rejected right away. Wednesday, we tried again, got rejected. 50-day moving average was running through there. That has been a solid resistance for a few weeks now in IWM, and we did see that as resistance. Thursday, we gapped down, dropped, and we closed right here on Thursday. Friday, we opened with a pop right into this resistance level. So what did we have as resistance here? We had this down gap from Wednesday going into Thursday, 50-day moving average, 30-minute 200 moving average, 1 hour 200 moving average, and that all pushed us back down underneath the 35 EMA, and we dropped it all the way down, filling another up gap here. And look at Stupid Willie right here. From the previous Friday to Tuesday, bearish divergence. Red signal line here on Tuesday, never got above that red signal line. Huge down day for IWM on Friday, down 2.88%. RVX closed up 14.57%, not even close to the implied move here. And you could see that we also broke the CPI support that we had from last week, Wednesday. And lastly, DIA. And what I've noticed is DIA has been a powerful leading indicator. Once we see this cross down of the 35 EMA underneath the 30-minute 200 moving average and that bearish cross down, then the rest of the market tends to follow as long as this 35 EMA stays underneath the 30-minute 200 moving average. Look at that curve down. We definitely have switched to bearish here, and last week we opened right here underneath the 35 EMA, underneath the 30-minute 200 moving average. We did open bearish here, and that opening move, we got rejected right away at the 30-minute 200 moving average. Dropped down Tuesday, then Wednesday, tried again, 30-minute 200 moving average resistance. Right here we dropped again. This was Thursday gap down. So 35 EMA, I did mention this because on Wednesday we did close bearish. So we closed above the 30-minute 200 moving average, but the 35 EMA was under that. So I said, don't be surprised if we got pulled back down, and I think that was an understatement. We gapped down and dropped down to the bottom of the implied move for the week. This is Thursday. Thursday, the implied move caught us. Friday, we gapped away from that 35 EMA, completely outside of the trading range, crushed the 50-day moving average. We tried to hold it here, but lost it and dropped into some of these up gaps here. So big, powerful down day on Friday. And I have been drawing attention to this downward facing 50-day moving average. It's been downward facing for a few weeks, and don't underestimate a downward facing 50-day moving average. It will always draw us in. It is no joke. So we did see that play out. We are now underneath the 50-day moving average. Futures do have us just underneath that 50-day moving average. It is a level that will be in play today, but DIA closed down 1.86%. We did not close within the implied move. Tuesday, Wednesday, and Thursday, we did close within the implied move. Friday, we gapped out and dropped. So wild stuff. We do have some pretty expanded trading ranges today because of the volatility expansions, VIX, VXN, and I will be posting today's trading ranges out on TradingView very shortly here, so make sure you check that out before market opens. I probably won't have time to make a video about today's trading ranges before markets open, so make sure you check them out there. The link is in the pinned comment below. So let's have an awesome week, guys. Have fun, trade safe, make sure you take profits when you're up, and I will see you guys tonight.